is February 19th, last day of this week, and we have about 1.5 or 1 week and 2 days left of trading until the end of the month. And so, what we do, as we always do, is take a peek at the monthly. And we can see with that close yesterday, 50.49. Of course, the market traded a little bit lower overnight. If you guys haven't caught up on your geopolitical news, something we actually talked about yesterday, the risk of it was shown last night, but the market rebounded nicely after trading a bit lower. So you see this orange gap here. This is from a non-back adjusted chart, so we're not really too worried about that. Biggest takeaways from our monthly chart here is that we do have a cessation of one time framing, even if we do recoup some of these. You can see we're pretty much trading just barely below yesterday's close, so still some downside pressure in the market, even though we got a big move down. That just kind of shows you how much fear is in the market. This big downside move, and then reports started coming out that it wasn't real and blah blah blah. Key levels to watch: previous month's low, right? That's that 50.63 or below it right now. This is increasing the odds of liquidation, right? We saw a little bit of liquidation last night, and the previous month's close, the previous month's open, 5105 quarter, are key levels to watch on the monthly basis. Switching over here to the weekly, you can see we are still one time framing lower. Previous week's low, 5150, so still a pretty decent ways below that. Odds are that anything can happen, but the odds are probably favoring that we are going to close below last week's close of 51.67.5. So definitely want to be paying attention to that, as it would kind of confirm or solidify this week's -4 look, indicating that momentum traders are kicking into the market. The last time that we had two -4 weeks, right, you can see was all the way back in September, right before that October low. So we haven't had two -4 weeks very frequently in the market, right? So a lot of times sellers have a tough time getting that momentum lower and getting that continuation. So just something to kind of think about if we're going to have a third one. I don't even know if I see three in a row on here at all. Yeah, this is three in a row actually. But yeah, just something to kind of think about. Switching over here to the daily, we can see we got that -4 day yesterday with a close of 50.49. That's going to be a key level today. Should the market get above that level, we're going to want to be very cautious with our shorts, especially after that move overnight. I'm sure a lot of people probably tried to sell into that, trying to catch a crash down to zero. Since then, the market has returned. So definitely want to be paying attention for that, or just be kind of aware of that level. That's that 50.49 level. The market is still one time framing down. We've got 1, 2, 3, 4, 5, 6 days in a row. Yesterday's low, 50.38 half, be key level. If the market should break that, we'll kind of see what happens here. Now, before we switch over to the profiles, let's take a look at the SPX, the index that tracks the S&P 500. And you can see here, as we pull this up, we still have a little bit of this gap left as far as the gap on the SPX, right? So there is still a gap, and the SPX is not back adjusted or rolled forward or kind of moved around in price as the futures are. So a little bit more truth telling here. Right, this is the cash only chart. Even if we switch to the extended hours, no change, right? Because it only trades during the cash hours. So still that gap a little bit below. We did trade through it in the overnight session, but because the SPX is a cash only, this gap is still going to be in play. Now, switching over here to the profiles, a little bit of review from yesterday. We opened up we moved lower, right? We couldn't break the previous day's low. Market caught a bid, and we ran off some stops. And this, I mean, this week honestly was a week to review if you are new to profile trading or inexperienced or really just looking for a good playbook review process or some good days to keep reviewing. When maybe the market's slow, you want to do some review. This week is a great week to do some review just because of how mechanical it was and because you really get the importance of value. As yesterday we moved higher, we did break yesterday's value area high, but we're unable to trade those single prints from the previous day. And then the market just rolled right back over, held the low, and built value lower. So, you never really got a chance for value to move lower. We did get a volume VPOC move higher in the day, and we had talked about that, how that wasn't really the best sign. If we were going to get the breakout, we didn't want to see volume, and the reason being is because most of this we assumed was shorts covering, and if they were going to continue to get momentum, we wanted to see the panic and the shorts continue to cover, and they wouldn't have had time to build that volume. And so then once they built that volume, the market rolled over and ended up closing at 50.49, right, lower. So overnight session, we can see, right, a little bit of panic, sell off here, break it out. You can see, right, no pun intended. News came out when the market was at about 50.40. I was just getting into bed, and then all of a sudden saw the market was down at 50.28. Opened up Twitter, looked at Twitter, and then Twitter said Iran had been bombed by Israel. We already knew this was kind of a possibility, and the market came lower. Later in the night, Iran came out and said that they had shot down. Nothing was actually hurt because they had said that they had damaged some nuclear facilities, but Iran came out and said that was just false, and nothing happened. So rest of the night, the market just rebounded, and you can see we're basically where we started. Now, it's going to be a tough trading day, right? And there is still possibility of opening up on a gap. We've got this low here, but we want to be cautious, but I'm still kind of leaning to the downside. But like I said, because we got a -4 day yesterday, if we get above this settle, this 50.49, you're going to have to be really cautious with these shorts. I think the shorts would probably be better off higher and, taking like more of like a fade look. But below that settle, I really think that, you're pretty much good to go. You want to be targeting that overnight point of control, which is down at that 38. And then you've got another little ledge down here, which is 508, 5008. And then we've got that very mechanical number, 5000, psychological level, just a very easy to reference number. Oh, the market's at 5,000, right? So going to be kind of key. I think above that, we start to get back into a little bit of choppiness here. And this choppiness is for the most part going to remain up until we have that momentum control level. Below or above that, we're going to be looking for those longs. And I think you're really going to have to be cautious and kind of wait until we get above that prior caught, because you're probably just going to be choppy inside here in that prior caught low. So take a little picture real quick. I want to show you guys one more thing, and that is the caught chart. Where is it at? Let's go ahead and detach this chart window. And so here's our caught report. These are going to actually be combined. So you can see our previous caught, and this is the report we're going to be getting today, is going to be on this profile here. And you can see where most of the volume has come in. It's about that 5100. And you can see the current the current caught VPOC is actually down here a little bit lower. Basically right where our momentum go no go level is at, right? And so that's why I'm thinking if they can't get above that, it's going to be chop, right? But if they do get above that, you've got to be a little bit cautious. They probably start getting some stuff going. And then especially if they get above that 5100, probably some upside from there. And we really, above 5120, kind of the gates open up, market starts to move higher. But you can see, here's the previous cot, right? We had a little bit of volume here, big volume here combined with the previous one. We moved down, so big liquidation, volume kind of distributing here. And then we're also getting more volume, especially, this overnight session, not really too much, but last couple of days we're building value lower. The key level here is really, I mean, right where we're at, but it's a settle. You can see the big ledge that's formed here, big volume that's formed. Below that, good odds, like I said, that 50.08 level I think is kind of the target down. That gap fill on the SPX is 49.82. I wouldn't be surprised if they go for that. I think a lot of people are going to come into this morning thinking, oh, that was the dip, I missed it, and they're going to come in looking to buy, and they might have missed that and might be over. So definitely want to just exercise a little bit of caution. But other than that, you guys have a wonderful day. Have a wonderful weekend. Celebrate the holiday tomorrow. Make sure you're managing risk and sticking to your trade plan. And I will see you guys tomorrow.